away we go on a Monday, everybody. How is everyone doing today? Getting started 12 noon, Monday, Tuesday, and Thursday. Happy to be back for the full week. I popped some tweets out today. Been a little silent in last few weeks, but recently getting a little more active as, of course, as we get to the end of the year and things are going to progress. I mean, immediately. Put out a little note that said, look, if we're going to really do anything major to the downside, it's going to be this week. Come on over here. Harmonic Trader on Twitter. And a couple of charts I want to highlight. Of course, we'll get to them in a second on the software. But I think everything really begins and ends with what interest rates are doing. So if you're not looking at the 10-year or the 2-year chart, those are the real two critical terms. We're looking at the 10-year because it has a bearish bat at 366, even though it's trading just shy of 4% right now. We're looking for what it's going to do this week. Continue higher and then violate, which should then set this thing into, a few more weeks in a blow-off move? Or do you roll over and do a pause? I mean, the indicators are trying to roll over, but they're not out of the zone. So again, shout out to everybody in the chat. Thanks for showing up today. Again, we're here Monday, Tuesday, and Thursday, 12 noon Eastern, New York time. No matter where you are, we've got people from all over the place. Thank you, thank you. Great to see everybody. Crypto is, hanging in there despite what the major markets are doing, but the major markets haven't provided us with much to go on. And in fact, I do want to kind of get into that quickly because here we are on a Monday after last week, one of the worst weeks we've seen all year. And then following that up with another down 125 on NASDAQ, down 25 on S&P 500. The Dow, not so bad, down 40, 35, but all these have kind of set up to where they're begging to test these lower levels that are popping up in the software and coming together as a likely termination or retest point for this recent rollover. This is the Dow. After breaking down at that 29,870, 29,800 level, I think it's been pretty obvious that we're favoring the deeper retest of the 50% level mixed with a bat pattern. All of that spells around 27,000, 27.3. And let's bring it also back to the whole notion that everything you're going to look at, measure, consider, essentially comes down to what we're referencing versus the COVID low. For the Dow, now that you've failed 29.8, you're at 29.3, 29.2. You're rolling down to this deeper retest on an accelerated move. So the 50% retracement level, again, to get you into the low 27,000 level is, don't be surprised. You got big numbers this week, earnings next week, a whole bunch of things that could move the market right now. Let me know what you people are interested in looking at, what you're currently involved with. I can't say I've got too many things working in my direction. One thing that I'm looking at adding, something that's long term, I'm still holding it. Just to give you a little idea of where I'm at, Philip Morris. I've had a core position there for a long time. Do I want to add it down here because it's retesting a deep crab? This is like many situations, even something that's like a more defensive stock with a bullish pattern. In this market, I think everybody's a little gun shy. Everything's very situational as well. If it's major markets or if it's crypto, things are you've got case by case, but you don't have major markets moving. Just be aware of that, and treat everything as a reaction. You're still predominant trends are in place. Commodity trends reversing hard. So excuse me, but I have my first cup of coffee with the live stream in a long time, so I'm hitting that right now. If you hear me slurping away, excuse me. Maybe I should hit the mute. I'll hit the mute button. But I anticipate going through a bunch of these today. Let's, again, pull up your 10-year, pull up your 2-year yield. Oh, wrong chart, but let me bring this up. And keep an eye on it. You don't even have to understand it. All you have to know is if these get decidedly above 4%, that's going to bring about, here's 10-year yield just flirting back with 10% with 4% to start the week. Interesting that you have a bullish HSI on the daily. Again, the weekly pattern that we were targeting 366 as early as April, saying, look, that's a possibility. Now you're 4%. How high does that go? I mean, it will continue until this HSI does some kind of rollover inflection. We can extend that out probably 2 more weeks, and look at what amplified RSI is expanding right now with this higher move. Never been, probably in my lifetime, interest rates have never been, maybe when I was 12 years old and interest rates were spiking to 14%, but I didn't really care. I didn't have a credit card, I didn't have a home loan, I didn't have whatever car loan that would be affected. But this percentage move, and think about it this way, since the August low in the 10-year yield, I mean, we have gone from 255 to 4%. That's a huge percentage move. But the monthly chart here for, even looking at how strong that is, look at your monthly. And this is, I don't think it's addressed enough that you are deeply in this overbought extreme, but we know what that means. Until that stops expanding, that predominant trend will continue, and it likely continues in a serial, that is bar over bar fashion within the predominant trend until you get one bearish candle. So you ride that until, I mean, you're a month, 2 months, 3 months away till even seeing any kind of rollover and inflection here. And it's at that 366 level, or you start to reach back to go look at what are some relative measuring points that I can look at, because take a look at the history, and if it was a stock or if it was any kind of instrument, you would say, okay, this thing is really trying to fight the trend, breaking out, trying to crack into some new historical highs. What are obvious points? To me, if this explodes at 4%, and it has to be monitored. I mean, this week, next week, like something, I don't know. I don't want to say it. Something might happen, or we're into this October time frame. But you then end up, look, it's acting strong where it should be rolling over. We've talked about that, even on the monthly, that a 1618 expansion, like an extreme harmonic impulse wave, puts you to 5%. That's not out of the realm of possibility. We're just measuring here. But those are, market does not look constructive at all at these lows. Interest rates are not rolling over even in a single day. And then you've got 10-year yield not even rolling over where it should be. Shark pattern, on the monthly, you do have some things. Take a look. In this area, it's a retest of the shark from 2018. Let me remove all of the drawings here. Just look at the pattern. And there's the type 1 reaction all the way down to target 2. Now we're back at the hop level. There's the signal. Now it's checking back. We need one bearish candle, something, a bearish response on the check back. The whole actionable opportunity, if you're bearish, starts right there. It blows right through. You just have to respect that. You have to respect that until you get some kind of individual bearish reaction. And if you're still looking at that and when that might give you some kind of rollover, look at what it's doing at the extremes here. Look at what the amplified RSI is doing. Above 80, it's quite strong. And then HSI on the bottom, still trending up. This would need to roll over before you would see any significant retracement, and then you run the possibilities, the higher possibilities of, okay, oh, here's the deep crab. I think we talked about that. That's a monthly on a 10-year, 392. That's pretty remarkable. But even if we're looking at that as a target right there, where's HSI? Those are the things we would be looking for at each step in the process, and that's quite strong. This is it is a type 2 crab. So these signals at the lows, especially on the retest, explains why you're blasting off above target 2. Let's see how far that goes. A close above 392. Interesting to note that last week we could not close above 392. This week, a close above 392 and last week's high should set that off to really then make a run into the fours. Hey, Jay, what's going on? Jay's asking, how about gold? Gold does not look good. Did you see it today down 30? I'm concerned about gold. Thinking that they might just pummel gold into the ground. And then everything we've been looking at, these prices at like 16, 1800 are going to seem relatively high if it does not turn around. Laser D's asking about cannabis stocks from last week. Boy, I don't want to get started on that because it's not been a friendly area for me to be investing in. Those stocks are just were absolutely, that industry was left out to dry. A lot of stocks at all-time 886s, they're just in the dirt. I don't think anything's going to change. I mean, no matter what current administration says, they're not doing anything. They killed those industries. Those stocks like Canopy and Tilray, $50, $80 stocks. They're now $3. But that's what happens in a bear market. We'll take a look at those. Let's dial back. I just want to show one or two of the macro kind of developments for the major indices the software is generating right now. You go on the weekly time frame where we are kicking out levels here on, so we got this alternate bat. This is kind of a new update I do want to highlight, and that's an 886 off of the 2021 low here, all the way back at 27,375. We've just been doing consecutive breakdowns, 3-bar reversals, continuations. It's been surprisingly nasty, I would say, and I it's tough to just keep beating on the bearish case, but we're bamming down. Where this is the BAM in action. It's a bearish BAM where you're breaking down, and then when you shoot the gap to the 886, it's not a friendly move. Here's NASDAQ weekly. Again, you tell me how those candles look. Who's the newest pro? Who's a first time listener here? Even you could tell me what that chart's saying. Right at the 50 level breakdown. Thank you. I had to mute you guys. Looks pretty nasty, and not to mention that this prior HSI signal, you can consider that failed right here. So we're in the early stages. This is not, you know, you're looking at that prior low, and then you're looking over the next few months to shoot the gap. It's going to take time. Yeah, I don't think this is even a dead cat bounce. Dow's rolling over. S&P is the one to watch. Listen, S&P is the one that really has the history behind it. You can go back to markets like in the 70s and compare with like a modern, relatively modern era perspective of saying, okay, this is relevant stuff. You're seeing a lot of the same conditions. This one has if this is your, from COVID low, if that's your B point, then you're looking to shoot the 886, from there to there and just come down. Under 3509, under 3500. I think you're going to have, you're in a bit of a denial right now. I don't think people think it's going to just stop here when you don't have any confirmation yet. And then if we start taking out 3,500 and change, then people will get to the just kind of the realization that this is going to be deeper. And they'll just start rounding numbers. They'll say, all right, well, now 3,000, 4,000 resistance, 3,000 support. And I'm going to just say, shoot the whole gap here, do the BAM breakdown, do the bat action magnet move from 3,509 to 2,500. And I think across the board, that's the kind of situation most of your big name opportunities are. That's how they're going to play out, especially if they don't hold. Dow breaking down now. So is NASDAQ. What's that mean for crypto? It's just not. It's a real, starts to become a difficult environment just across the board, where then you're looking for repricing in a totally different environment. You're looking to consider the value of whatever you're doing in a completely different environment. There's total 3, folks. Okay, your 886 is 145. So we just come back across the board to, are these all going to go to the 886? Are they all going to just have to come back and with no relief from major markets, even worse, interest rates? Are we in that full 886 cycle like we've seen before? It doesn't have to be super all time, but you can go off the obvious swing low, the COVID low, where this 886 thing is still much lower across the board. We know on Bitcoin, Ethereum, they're a lot lower. And is this just the short-term pause before they go all the way down? 886 again, 433. We're really close to knowing. I think we're probably one bad candle away. And if we get something going on, surprise event, what have you, at these lows, you're only a bad 1,000-point Dow day down from taking that out. S&P, same deal. NASDAQ's already been in trouble. And then in that kind of a day with crypto, and I just think there's going to be, you're not going to hold this. I mean, you're not going to hold that level, or you're going to take 2 or 3 months of further consolidation down here before you can think about it. Versus, let's connect dots. This is total crypto market cap, by the way. And I think it's the same across the board in a general sense, that we can be drawing patterns like these shark patterns. And, here's a shark pattern. I hate to say it. And with a full 1-0 from 2019. Essentially what you're looking at is a 1618. This segment right there becomes a 1618. That's why these every day, every week, you don't put in bullish candles. You can't even have some bullish days and you continue to kind of just do that sideways action. It begins to add up against the case of this holding. Yeah. DXY, that's another, absolutely, another unbelievable market that is, we know there are major numbers up there on DXY, and the other part with the DXY is that it's so strong. You are weeks, if not a month or two away from even being able to give you some kind of major reversal, 1 bar candle reversal. Here's your monthly. It's a type 2 deep crab. So this is also a great situation of understanding, look, we're on the retest of the zone and we're looking for HSI somewhere in here. It does not develop and it blows right through. I would still look up there for at least a place where it would pause, and here it is. I mean, on your monthly basis, and we've gone through this, it was probably a week ago, but that's, expanding dramatically. And then look at relative strength. You're at an 80 level. When's on the monthly? When's the last time we were up there? I don't think ever. Decades, 40 years. 40-year high on RSI reading on monthly. And I know stuff like Japanese yen has been a monster. This is, again, if you're on currencies, which I know a lot of people are, you have to be looking at this Japanese yen as one of the most insane moves ever in currencies, in major currencies, especially relative to this kind of a base. Check it out. Look, this is more as like where harmonic patterns are a signpost, a framework. But I did mention that we have this crazy crab pattern. And so I want everyone, especially those that are focused on trading currencies, to realize that we're most likely in the state of this type 1 reaction finally, especially after taking out the top end of that resistance. I would want to watch for that this week, a breakout above the zone and above these prior highs where you get above 145, 146. Then you just shoot the gap to 168. That's going to blow people's minds to complete the type 1 reaction. That's where you are. So a monthly close doesn't have to be huge, but a monthly close above 145, you immediately target the 168 level. And that's this is the reason why it's blowing people's minds, and I think why you're seeing it so elevated is because it did nothing. This was a real dead trade between 80 and 120 for decades. But you're above your 30-year highs. It's just, that's where historic price action takes over and becomes significant. And if anything, we know that we can go as high as this target too. And we've been there before. I mean, it's not, I don't think people realize, look, I should have a better longer term history on yen, dollar yen relationships, but it was 300 back in the 70s. In the 80s, it was 260 before their market crashed. So a lot going on there. I mean, again, you put these pieces together, you look at what they're doing. Really quick, someone said gold's down 35 already. I'm thinking, I said this last week, you're breaking critical levels under 1700, where then this is a good quarterly chart, and I think it's all you need. You start looking for gold to do a minimum 1618 offshoot. Something like, hate to say it, but it's really from that immediate high to low, the fact that that failed, you're looking at 1400 and change. Especially with if we end the quarter, and that's December, so there's a lot of time. But if this thing trends lower and you're under 1600, the whole thing is done. I mean, you're at that point where you're in the midst of that larger breakdown. Probably monthly or weekly are going to be a little bit easier to digest, but that's where you are. Monthly doesn't look great. Monthly looks like an absolute breakdown of this 1673. Yeah, I think it's a lot of there was a lot of hope that this would be the super cycle breakout for gold, and it's not. And I think you're going to get an offshoot correction, much like you had here. You go back to 2012, 2013, you had this big push to new highs, no continuation, and then this became like a 1618 correction of the final move. It would be something like this. Well, I'm doing it off of there. You could even do it off of here, say something like that. Same type of theory where, yeah, maybe longer term, you might be okay, but you're in the midst of the correction where everything else you've been looking at, if it's crude oil, if it's interest rates, they're all going to continue to do what they've been doing and take out the lows now. I know I'm jumping around today, but important markets. Individually, there are many important markets. Probably the top 3 or 5 are these, are the interest rates. For stocks, it's Microsoft. And it's Microsoft because of what we've been now almost at the hop level and something that's now generating. We've been talking about 221. Okay, we did get a confirmation of the first confirmation. Okay. I didn't do anything with it. It was a pretty steep pop up and then spit right back down. This is where I would look for, if I'm looking for this to hold, it's come back and retest. I know this would take a little bit more time because it is a deep crab, but I wouldn't be surprised to see this thing flirting with 221 by Friday. HSI, amplified, RSI, these are all HSI's trying to get above the 50 level, and then standard RSI though it's in a different not these are not, when you get all 3 are indicators and they're in different spots. Look, HSI is giving you some kind of short-term reaction up. Amplified RSI, which is should be leading, you should see amplified moving in your desired direction. You're looking for this to turn around. It's not. It's back in the zone, expanding lower. So you do nothing. You want to see amplified running in the same direction. But no, you've got amplified going down. You have HSI going up. Pretty confusing. What's price action doing? Going deeper into a zone. And here's the other thing. Like I showed you with the diamond, the industrials, with this recent breakdown, and it's not only because of the price, but time as well, because some time factors are built into the pattern structures. Recently, I'd say in the last 10 days, a number of these crab patterns are generating where it's wanting to pull off of a longer term leg. What it's suggesting to me is that the algos are kind of saying, hey, this is going to be a longer ABCD phenomenon. Like this CD leg is going to be a 1618 ABCD with this bigger crab pattern. Or I think it's on a weekly as well. Let me see. No, yeah, okay, weekly for Microsoft doing similar situation here, flashing a bat pattern. And that's 213. That kind of lines up with the 221 number that we're looking at. But all of that's points still 3% lower before you'd even look at it. Okay, and then Tesla. And we've been really on the money with Tesla with this type 2 return. And it's important to understand how that evolved. It actually went through a perfect 1-2 with the deep crab. It was a couple of back-to-back things, but we've been talking about it's on a daily. The daily had the back-to-back patterns. Here's the weekly. Weekly, and I've mentioned this was less ideal because you didn't have HSI confirmation, but we were still, and I still say it's like this. Type 1, bang, type 2, return. We've been saying that since, close to 285, 290, 208.79 is the 886. You're almost there. What was the low today? 218.36 was the low. You were within 10 points. But here's the problem. Your minimum number is 208.79. I want everyone to pay attention to that, but go to the daily, okay, because it had the back-to-back patterns, probably the better place to be monitoring it. You're retesting. We've got some numbers to your 222 now. Oh, there's Tesla 222 looking maybe as low as 201 on the daily. But here are your indicators. Amplified RSI deeply oversold, expanding. Probably 3 days before that finishes getting out of that zone. And then, get back here. I think even slower is going to be standard RSI, which is oversold now. First time, and this is the deepest one in a long time, but first daily oversold in, I think, go back to May, but even more severe, you go back to March of 2021. And it's below that. It is below that. So you're starting to get a bit deeper on all of that. You have to go back to actually 2020 to match, or at least be a little bit below where we are currently. You're around, what, 27 here? And if you go back to 2019 low, that number was around 19. When you get this deep with RSI, sometimes they will go to the 20 level. And that's about as extreme as you'll get on RSI. But that would mean that this just dumps now, today, tomorrow. That's why I really think if you're going to see this massive breakdown of the lows and we get the bigger scenario, it's going to start now, today. The other one was Apple. So Apple flirted with that 130 level. You're 132, 131. It's a deep crab, much like the other ones. Now we have another bullish bat pattern. Okay, just affirms this whole zone between 131.86, maybe 135. You get it. The low 130 zone. And this deep crab, that's at 134. HSI, trying to trigger, but not quite there yet. Maybe come down one more flush. 139.75. So all of that is, pointing to a final retest with a lot of these. If it's Microsoft, if it's Apple, if it's Tesla, you're within reach of doing this kind of a doink move into a major retest zone, and then trigger something. The patterns are there. You're 2 of 2. So those are the major markets. I mean, individual stocks that I feel that are going to kind of lead the way. Other ones will follow. You do have things that are falling apart like Meta, which there are some toxic stocks out there. And this is one of them. And even, look, use the patterns and stick with those that do have the patterns. But we have been talking about this meltdown for a long time. And even up here at the 165 level where we registered, we go sideways off the initial test, but then we registered another bearish signal around 175. This has been melting down with likelihood of eventually hitting the 116 hop area. I mean, on this move, you're 132. Be probably the steepest, deepest all-time correction. Here it is on a weekly, and you have the same pattern. It's actually measuring probably off of an even better point. You know, in this case, here's your 2021 low. You're already under the COVID low for Meta, folks. Think about what that means for a major stock like Meta. Okay, and the weekly chart looks a lot cleaner. Tell me that's not going down to hit the hop level. 97 on this one in this kind of a fashion, and it could be a pretty nasty wick. 132. These are minimum numbers. Any patterns on the arc? No, but on the SARC there is, and this is something I want to look at. So the SARC, that's the short arc. Okay, check this out. Beautiful Gartley from August. I don't know what's going on. I don't have HSI working on that one. Go to the 4 hour. I have to look at why that's not happening. Maybe it's a data thing. Let me check my data really quick. But this is a good one. I've been watching it. It's, you know, basically between 60 and 70. Hold on. I have to reset this data. Let me do it this way. I don't know why that's giving me that. HSI is giving me a little bug here. I'm not getting the full amount of data that I should get. 1 second. Don't know why. But we are, let's just look at the pattern for now. But it's a great pattern. There it is. That's weekly. Sorry, I want daily. So we're at we have a Gartley that completed, but we're trying to complete and can go as high as the 68.54 level. So it's still a type 1 reaction. Okay, it's not really close to being a type 2. Almost did like this. Type 1, come back. Hey, let me bring up the TradingView platform and let's look at there. I know that'll work. That's been, sometimes that e-signal is a bugger. But I'm looking at this, I'm looking at SQQQ, because if they're going to explode, they'll probably break out of these ranges. Here you go. So the same Gartley, beautiful. Beautiful. As this is TradingView platform. And go to the daily. There it is. So here it is with HSI. And we would still treat this as a type 2 setting up, type 2 return where, look, there's the retest HSI for the end of the first reaction. Completion was there. No confirmation on this one. So, you know, I don't know if that would be something I would even consider. I mean, you had confirmation here, but it was a bit to the right. But you almost got to the type 1, target 1 there, but didn't make it. Now you're there. There's type 1 objective. Okay, reaction over. What are you doing? Pausing here at target 1, now trying to break out. I would still say, hey, can you do something like this? Come back for, I mean, that would mean the market would have to jump from there. But is that the type 1, type 2 setting up? You got to break the trend line on that SARC. You're not there yet. I mean, this could pop to 69.70 before and come off the target 2 like that. Look at the indicators. Yeah, look, amplified still heading up. Again, looking at just the simple location of where's amplified RSI, it's above, it's heading up. I think we can all draw an up arrow. It's trending up, and it's above 50. That's a good sign. You get some price movement above there, and HSI, it's trying to come back. Looks like it wants to do another retest. You'll know in a day or so. No reason to jump on any of that. That's still up for now. I would want to see that come back, though, for a type 2, like anything. Here's the SQQQ. Again, this is that ultra short on the Qs. I found this pretty interesting. We do have a perfect, the software generated, okay, it's a type 2 now. Again, so critical where we are this week. We've had a few patterns. These are all generated by software on HPC for TradingView. Now we had this, just in the last few days, really quick type 1 reaction with confirmation. Here, look at the zone. Super tight. I think that's amazing. Bring it down. So there's the confirmation. There's your check back. And spends 3 days, 4 days down after the check back. Hits target 1 exactly. I think that's insane. You know, the target 1 exactly was, hold on, off that bat pattern, was 50.54. That low was 50.54. Theoretically, you could possibly have not gotten picked up and then have the whole thing come against you. That's happened to me before. And then you get this explosive type 2 return. That's why we treat them that way. An amazing example, though, of that profit target and why just going off the software and utilizing software levels makes it so much easier. Okay, but now, even SQQQ gunning for that 65.48 level, especially with this breakout and follow through on the daily. Is a pretty nasty reversal here. It would almost be a perfect island reversal at a very strange place. Regardless, this is a pretty powerful move that should get you at least to the hop. I mean, conservatively, just run it up to 65.48. So what does that mean? When the market goes down, this goes up. And it looks like NASDAQ's ready to do another little dunk right at the lows. Really quick, here's a NASDAQ. Go back. Update it. Yeah, there you go. I mean, look, even on the daily, shooting gap is, for everyone looking at harmonic patterns for as long as we have, to see a pattern like that be fulfilled is really not a surprise. How do you put yourself from here to there, I think, is the critical factor. What we're looking for now and going forward the next several days is a day over day continuation of this current meltdown. The malaise has become a meltdown. So let's a year ago I was saying this thing would become a malaise and it would be, you know, just really something would be not pleasant. Okay, so now we're in meltdown phase because since the rollover and coming back on these initial lows that happened last week, it's not even a dead cat bounce. It was a little pause rollover that you're going to close under critical lows. It's not even last week's lows. It's this close, that open, all of that around 11,050. I mean, you're 10,900 easy. And any close under 9,000. I've said that before. I'll say it again. Then seals the deal to shoot the gap, the BAM, the bat action magnet move. And it's happening right now. Making new lows right now. Down, NASDAQ futures down 180. They just kissed that 1914 level. Sorry, the 10,914 level. And so for me, I would look at it like this. It's just you're fulfilling the longer term scenario. I talked about this in the monthly reports for the members, and I won't get into the detail to give away that content, but essentially, you know, the BAM scenario becomes realized. It's just going to take, hate to say this, more time as these structures develop. But now you're 4 of 5 legs on the weekly. Your daily patterns, they start popping like this. You have to respect what it's kicking out. And almost, I don't think I think everyone can say, okay, this isn't going up anytime. Are we going to, Is this an area where I'm just going to buy if I don't know anything about harmonic patterns? Is that going to happen? Let's just, you know, relative to this whole downtrend that we've been in. Don't think so. Go to long-term charts, folks, and then the other consideration that I do want to kind of impart. So we do have understanding here of what this situation is. I said this 2 weeks ago that the current decline is the fourth worst. Okay, only 2008, 2002, and 1974 were worse. But we're quickly starting to make a run at the decline of 2002. And that's for the S&P mostly. NASDAQ was the worst for 2002. But S&P and NASDAQ, all of them are just long-term charts coming back to the last obvious support level, which was COVID low. And you can, again, just say minimum 886 within this whole uptrend. And then the precedent, I think, and I've mentioned this before, I'm going to show you the Twitter pages and images that you can look at for later, is what happened after the run-up. This is 2000.com. And then we got past the 50 level, and then it was just a flush to the 886. Okay, utilizing, say, 1995 as an intermediate low, that was fine. But that's where we are, and that's kind of the inflated cycle that was realized, and now you're on the back end of that cycle, and you're probably 1/3 of the way through. If we're in this larger scenario, which I think we easily are, maybe halfway through. But that's becomes a buyer strike, and I direct your attention back to the likes of Microsoft and Apple, that these will not at all be opportunities, will not be true bargains until they're at these minimum daily levels, if not lower, if not substantially lower from current prices to where, forget 221, forget even 200. I'm talking like 170, 160 for where you then, again, do these historic retracements, 50%. Why not? Weekly, go to 213 minimum. That would then become a full 33, 35% off the top haircut. Would not be too much historically either. We've seen that over and over again. I think it's really helpful to go back in terms of scale, go back to these, I would say the 90s, 95, and into the 2000s of the rather large patterns that developed. And this is something I'm also thinking a lot about. So Microsoft, after probably being one of the best performing stocks all around in the 90s, put up a beautiful crab pattern. This is .com. Okay, that's your .com tech crash. Not too bad. I mean, yeah, it seems really bad when you're at 60 and you bottom out at 20, but massive opportunity. Okay, that was a 2/3 correction, but the key here is you have a pattern. And that's something I'm going to look for on all of these tech stocks, is some kind of massive 1618 or big bat pattern at a minimum. I think those, you need to print some patterns. You need to print not only that, but a type 1, type 2 kind of configuration like Microsoft did before you would even consider anything turning around. And so that, if that helps to temper expectations of where we are, I'm not saying run for the hills. I'm saying look for this final phase. Yeah, we're washing out now. Look, Dow's now down to 225. S&P cracking new lows. Okay, so we're in this downside of this major correction, and a stock like Microsoft is going to basically repeat history, then give us some kind of pattern formation, but at much lower levels. It's already pointing in that direction, And if things really start to suck wind, then we go into a sideways consolidation for a long time, like was 2000 to 2009. Because Microsoft didn't do much. I mean, it was unbelievable. Notice how it was a type 1 and target 1 at 30.35 capped the whole thing for the decade. And finally did a capitulation move, all the way here to 15. Hop level was 1442. The absolute level 1487. Not bad. But these are going to be the long-term levels I would target. Just know that we're coming down that right side of the slope here. Here you go, 2010. So everything I showed you, which was pretty remarkable, making a low at 15, going to 350 is insane. 20x on your money, low to high. Of course, you're not going to capture it, but 10x, 5x. But when you come back down, you finish the cycle, and that's what you have done. You're going to have to do something like you've done in 2000, and where you are relative. Look, retracement measurement for Microsoft. Just understand, you haven't even corrected a 50% of the all-time move, or at least of the 2010 bull market. Ooh, let me move this over. My price scale. Sorry, folks. I see that something's not right here. There you go. Bring that back in. And it could happen pretty quickly. That is something, maybe just speaking from experience, that let's just get ready here the next couple of days. Today's October 10th. Okay, bit of a holiday. Happy Columbus Day. We're going into the next week. Historically, of course, the 19th, the 20th, they've been historic days, but essentially this second, third weekend, there's a lot of options expiration that it's involved. That's why it gets pretty crazy. And then you have a settling period between then and usually the election. How low does it go? That's the question I have of on this move, how low does it go? And then does this just kind of lag into January, which seems to be the case because the larger scenario is taking shape. Even if, let me pull it away. Other thing about Microsoft here's the second leg. There's your bat pattern. Thank you. Again, even just simple A, B, C, D dynamics here are something you're going to want to see if you're going to even try to buy this sucker after it finishes the drop. Think of it this way, like we're obviously, we know we're in a correction. You're looking for a generational buy. I don't think that's too crazy to say that, when this does bottom, you're looking for this to be a major cycle low. So if it's already asserting itself like that, where at some point you're doing enough damage for this to register on a historical decline on a percentage basis, and you're expecting whatever that low is going to be a pretty substantial low, you're going to want pattern formation, you're going to want confirmation, long-term readings to all point and really reinforce that. Today's jump around day, so I want to jump back quickly to the Bitcoin futures chart, which I find nothing short of fascinating, that we have been able to hold this 19,000 level. But I do want to highlight a few things. There's Bitcoin futures weekly. The daily chart is the one that's got the pattern. Looks like this is deep. It's a regular crab. There you go. It has parked its butt right at 19,416. I think it's pretty amazing. It keeps holding on. But you developed something I don't like to see, where you have 1, 2, and then a third. Some people call this like an inverse three drives, development of a 5-wave structure down. And I fool around with that idea. The real issue I have with this is you're not successfully taking out anything. You're since the July move, which was an absolute dud. That's all it was, a sideways dud. You're doing this 1, 2, 3 move that you're not. There's nothing here. You take out these lows, you take out that prior low. I again, with enough time having elapsed, going on 4 months sideways in the zone, not able to do anything off of even confirmation levels, everything at 19.4. I have to say, just get ready to step aside. Get ready to step aside because I still say under 18,000 a close, anything under these lows seals the deal for not only the breakdown or failure, but again, you kick it up to the whole notion of doing the 886 reset, which all of them in this environment, it is that severe. It is severe enough to where you can say, okay, this is more than a retracement. It's more than a correction. Okay, this is a reset. 886 going off the 2019 low, 10,588. Pretty much on the dot. For the futures, that is. I know the spot price a little bit different, maybe 11,004. And it's nasty. I mean, it's just a nasty chart. And here's the other thing I wanted to show. On the TradingView platform, we do have these small patterns that have popped up on a number of pairs. And they're doing nothing. They are doing, this is for Bitcoin. This is a shark pattern. I mentioned this last week. It completed, 2 weeks ago? And just a dud. Where you would look for some kind of vigorous reaction, movement on the type 2 confirmation, just not responding. So another situation to bump your stops up under 18,000. This thing becomes a real problem. And the other part about it is that why not go for the hop? You have this massive crab pattern. Take a look. Here, let me remove this. It's a massive crab. We have spent more than enough time going sideways since June 21, and then confirmation right there, June 21. We are, we made another short-term low on September 21st, but no follow-through. And so there's September 21 right there. And that's 18.5. All of this, it gives you your $500 zone. That's it. You're running out of time and running out of price even with Bitcoin. Don't think this is going to last. So what happens? The shark fails, possibly, and guns for the hop down at 11,100 in your capitulation move. I mean, don't we need capitulation? Don't we need the VIX to go to 40? I should pop to that chart too, because all of these markets need to express some kind of capitulation event to essentially say, buyers are washed out, or sellers are washed out. New buyers are ready to come back in for a new cycle. But with the way this is going on, then the failure of this this crab pattern to yield anything off of that low, the retest here, shark. No, I don't need to see much more than, and keep your eye on it, under this 18,000 level for Bitcoin. Go to Ethereum quickly because I think crypto is important. It should give us some earlier signs, maybe even than other markets that, you do have trouble. Here's Ethereum. And again, the bat from the June low, now we're now in a bat. This is definition bat action magnet move. This is kind of what's happening on the NASDAQ on a weekly basis. Daily time frame, again, If you haven't seen this workup, check out last week or the week before. We've been saying this since the breakdown of 1500 is that you shoot the gap for 1,000 retest. That's it. Until then, you're not even, you have nothing. There's, yeah, well, I mean, look, let's not be totally dismissive. Let's read it for what it is. What happened really is you recently amplified RSI. This indicator was rejected at the 50 level. That's critical. And the breakdown, okay, under the 50 level can present acceleration problems, especially when you're in the C to D leg, which you are. And looks like HSI wants to come back down one more time. I think it's this week, guys. Dow down 267.70. NASDAQ down 200. S&P, that's down 650 now. We started, it was 25. It's getting ugly, kids. Here's one or two of some of the short ideas I've been posting recently that working out. I think we'll get Uber. This is a short from 2 weeks ago. We're back down to 27. Another little shark pattern on the daily. It's back down. Almost perfect target one. It's 2640. And you're at 2730. I just think you've got a bullish pattern as well that you're retesting. So keep an eye on this. If you can't get under 26, take it off there. Otherwise, look, the big retest of the bullish pattern from back here is at 22 and change. You're 27 currently. That's where back-to-back patterns really help. So the larger move, come all the way back down to low 20s instead of 27. The other one was Target. And this is after already getting absolutely abused. Just terrible. Another shark. Slow but steady all the way back down to Target 2, which is 140. And we've been talking about since 170. What was the? We had one other one. What was the other one? Was it? I think it was. Let me pop this one. This was a prior 3 ideas. It might still be in play. Is General Mills. I think this is pretty interesting. Daily. Oh yeah, 78. I popped this last week on the website. I think I gave it to you folks. It was it's ABCD, but weekly I think is what we have up here. Weekly Gartley. Weekly bat up at the hop. 78's the number. Let me take this away for a second. So even, your safe haven food stocks, what are they showing you? 78.10 for General Mills. Easily could be back down to the 68, back into the zone. That you're looking at what should be the inflection peak for that move. Keep an eye on it. That can come down, a nice steady drop where these, once they give, goodbye. Here's the other one, but on the other side. So again, I'm looking both ways here, but here's Procter & Gamble, folks. And where's the daily time frame? Big crab pattern. But again, I don't know if I put this one up yet. This might be a new ideas for gold members. Not to give all the content away for free for people that are paying for the membership. But again, there's plenty of these. You go through the software, you can run the scanner. Maybe I'll do that tomorrow as I'll pull up the scanner. And we start scanning for the major, because there's a lot of situations and well-known stocks that are giving you these type of situations where Procter & Gamble, sound company, been around for decades. It's at, you're talking about a pattern that has developed over the last year, and it's at a 2 of 2. All we need to see is some kind of confirmation variable, HSI, arrow, amplified RSI, to give us an inflection down at that point, and then just get perspective. This is where some of these slower stocks, especially if you want to use harmonic patterns on 401k style strategies, can be effective. You know, you can trade it a little bit with on a slower time frame, and take advantage of pullbacks in companies like this. You know, forever stocks, I like to call them. Here's Procter and Gamble on the monthly. A lot of damage. You know, you're down. Oh, a good, I would say 25% on P&G. I don't know what's HSI is giving me an issue. Let me see HSI on a weekly. Okay, HSI on a weekly about to register. Amplified, not yet. And standard RSI, not yet. It's almost there, but I'm starting to look, you know, the 120 level on a rather slow stock. But harmonic, with the harmonic levels, the way these things can come together, lower margin of I think of volatility, and less likely to be kind of an excessive price action situation. Maybe you come under 120 by a buck or two, but this general area plus minus $1, $2 is a major setup for the whole long-term trend and this pullback that really started, like I said, a year ago with nice harmonic pattern. Now you have a back-to-back harmonic pattern situation. There was a deep crab that marked the top back in December. Type 1, bang, retest 2. So why not happen again on the bullish side? I'll be featuring more of those. I just think this week we're looking for that flush. You're looking for those big numbers to get tested, and in a hurry. Okay, Nasdaq's making new lows. Let's keep it going. 295. Yep. Where are we going to go today? Let's come back to Nasdaq really quick. Let's take a look, because what if we're going to drop now and we're going to just take out the obvious lows, which we're doing, and essentially we're under 10.9 now. What's the big pattern? What's the big even immediate level to consider for today? Here you are. Listen, you're back under the 886, retesting the October lows. Not a bad little price segment, though, to consider. Check it out. There's October 2. Come all the way back up. 886 is at 10,986. Again, another reason why 11,000 and today is everything, because if that doesn't hold, then the likely scenario here of this 30-minute or hourly little segment from here to here, something like this, and down, well, that should be a shark. I mean, that should be a shark where you should be bouncing here, 1618. But no, if not, and you fail it, you go down straight down to the 1618. That's like what's at stake here. Did you kiss that immediate low? Oh, yeah, you just did. So you're kissing the low right now from last week. 10.9, 10,900. You have to put something here, and I would say that's across the board. Look at Dow. There's the Dow futures doing the same thing. They're going to try to defend it, although I really think 28.8. I've been saying that for a long time, is the absolute make or break. We almost took it out last week, and I'll stick to that. Under 28.8, you have real problems for the Dow. And the Dow futures, here it is. You've had a couple of patterns on the diamonds and the futures. You have a deep crab. It's real nice. I mean, that's the kind of thing I want to see. There's the reaction as we come back to retest the summer's deep crab. We have another butterfly back in the zone. Where's HSI? We just triggered. We're checking back now, but you fail this, you're done. If that, you fail this area, you got real problems. And that's, I'd say, the hop at 28,371 of this butterfly. Here's the zone. This is just in the last 5 days. Pretty amazing. And last week's low for the industrials, that's under 28,635. You get the picture how critical this is on the daily chart too. So down 260. You just need, go down 500, go down 1,000, and then that would be, even an individual bar doing that would probably be a gift, because then it would say, all right, forget it, we're just going to flush it. Keep an eye on it. How's everybody's coffee doing? Mine's doing quite well. Thank you. I'm picking it up as we go. Anyway, and what are we going to do there? How are you going to play this? The market, again, I think more on reactive situations, like the Uber, like the Target. Oh, here's the other one, Netflix, folks. I still say that one is set up like these other ones with these consolidation patterns before the continuation. Probably a put. There's probably some kind of put in your future. We've been brushing up against 240, which is the terminal bar of the crab pattern, and come back down where 193 at target 2 is the ultimate objective. Sorry about that. With the larger possibility, something crazy, maybe a massive breakdown gap of where I still say Netflix is in major trouble. Breakaway gap, maybe one more group breakaway capitulation gap, because look at the all-time weekly levels. This is why look at your monthly, look at your weekly. You're down here with a shark. And look what happened. You hit the hop and then you just generated on the weekly a bearish HSI candle around 235, 238. What does that tell you? More time and lower. And if you look at the all-time history, and I think it's important that people do get on the software and pull out your longer-term charts, monthly, weekly, and start looking at what are the possibilities. Not saying that they're all going to go there, but just so if you see it really kind of collapse here, that those possibilities are much lower. 886 on Netflix is at $80. And I know it's tough to visualize, but it's not when you are on the backside of something that's already ended, and you are going to have to just kind of go back to the super long-term trends, and you're there. I mean, you're already there. Adam's saying might put in a low that we can bounce off for the next few days, and then we roll back to it at the end of the week, like last week. It's just not. We've been looking for that daily low. We've been looking for that daily bounce. It's not. It's melt mode. And so now you're here, third week of October, unfolding right before our eyes. There's Netflix on the daily again, where this could be a massive continuation structure. We've seen a few of them. There was one other one. Gotta come back to it. Yeah, come back to that one. And I think, look, the other place, the final straw that will fall will be crude oil. And regardless of the cuts and everything they're talking about, this is starting to look more like gold every day. You do have a shark pattern, whatever. I'm not too concerned about that. What I'm looking at are the weekly levels that, we know what that 125 level was. That's, again, I come back to this just in, let me go to a quarterly chart. This will show it easier. It's a simple measurement, really simple on crude oil. Okay. Regardless if this is -40 or whatever, it established a price range. We know what happened, okay? Went and did that thing where all the way down to negative 40 from an all-time high of 147, hits the 886, and I mean got rejected in a severe extreme manner. It was a gap up, rejection down lower, and ever since then, we've done a retracement. And that retracement, I mean, we entertained this a long time ago. Didn't seem possible, but I would think, look, an all-time, not a 5-0, but, 5-0 maybe some point down the line. But I think a 382 is not crazy to consider of this all-time move. So if 125, and that's it. I don't know why that's not giving me what I need to say here. Hold on one second. If 125 is it, oh, there we go. And that's the all-time 886, then we should do a minimum 382. And that really was not out of the realm of possibility, especially historically. We've seen these kind of swings where then come back to the 382. That's what seems to be the longer term levels are definitely continue to dictate. And if that's the case, and that's what we are looking at, sorry, let me go back here. Then this crude correction retracement has to come back to the 382. That's $65. Let me highlight one of the big ones in the sector, ExxonMobil, finally getting up to hit with, check out HSI on the monthly. I'm watching this closely. Could this be an opportunity for puts? Even as crazy as the environment is, we had a check back. We have a monthly bearish HSI candle pushing up against 2014 highs. That's, I think, a monster setup. And then here's the daily. Okay, again, remember we have this deep crab. It's a type 2. It's a type 2. And now, the thing that we didn't have that we have up here is, recently, is HSI rolling with amplified rolling. Standard RSI? No. But I wouldn't be surprised to see this thing. You're trading 100, 99 and change. Do a reaction to 94, a target one reaction, come back down. I don't think you're bucking up against this pattern again. Energy's trying to scrape against some resistance and not blow it out with these kind of inflections that have just occurred in the last 2 days. A lot of moving parts, a lot of pieces here, and XLE is that's the ETF, same deal. This has got an ABCD, but I know the weekly is, check out your weekly. Look at that. Deep crab, perfect type 2, folks. I mean, this is the stuff that comes together structurally, and you're just triggering, looking for confirmation. The type 1 is already over. I mean, that was really fast there. And again, 66.41. That was the end of the target 1, type 1 basis. This is your support. Okay, and you're really scraping closer to resistance at that 1618, 86.89. Call it 87 on the top side, and then 66 as support. Same deal with UNG, Nat Gas. They're trying to come back a bit, but look, Nat Gas is this situation. Type 1 move, hasn't registered anything on, this is a weekly, and I know the daily is retesting not only bullish pattern, but other bearish zones, a couple of back-to-back things. Okay. Target 1, I think $21 is a pretty big number for that. Someone said Boyle. Here's Boyle. There was a big pattern in Boyle, but it's, look, be patient on this. Boyle needs to trigger, And you're retesting your 886 at $48. That's a big number for Boyle. And remember, this thing can overrun. Let me go to the, what's the 4-hour chart? I don't know why. HSI is giving me an issue today. There you go. So on your 4-hour chart, you have not registered yet. What you want to see is pattern complete. And the 4-hour chart is probably a better time frame to be monitoring this. But pattern completes, and then you register and complete, and then form the confirmation to go to target 1. That's a big one. We'll come back tomorrow. I think that one could be at the 48 level by tomorrow. Give us a rather substantial opportunity. Just a reaction, though. But hey, that's a nice pattern we've seen for the first time in a while on the bullish side. Let's get into some of those others. We'll talk about XRP tomorrow, folks. Yeah, it looks good. But again, that's still just big reaction phase. I'm more concerned with keeping an eye on total 1, total index, total 3, Bitcoin, stuff like that. All right. But come on back tomorrow, 12 noon. And then Thursday, we'll give away some books. So until then, as always, go get them. We'll have a great one. Get on Harmonic Trader. I don't have to tell everybody. Get your trial to this platform or any of them for TradingView. All you need to do is send your username to hpc@sr-analyst.com. All right, we'll get into more of that tomorrow. Thanks again. Have a great one. We'll see you tomorrow, 12 noon Eastern.